Today's video, I'm going to explain how you can use a loan to combine with your self-directed IRA to do a flip. It's really not widely known, but yes, you are allowed to borrow funds in your self-directed IRA to buy real estate or to secure a flip. Only a couple things to keep in mind. Number one, the loan must be non-recourse. What's non-recourse? It means a loan you do not personally guarantee. That's as per section 4975C. And then number two, the only downside of using leverage in a self-directed IRA is there's a tax known as unrelated business taxable income tax, or UBTI. And that UBTI tax will tax a percentage of the income or gains associated with the real estate that's connected to the loan. So for example, if you put $100,000 in your self-directed IRA to do a flip, and you borrowed $100,000 from a non-recourse lender, it's a 50-50 debt to equity ratio. Meaning if you have $10,000 of net income, net profits associated with that real estate activity, 50% of it, which relates to the debt, would be subject to this UBTI tax, which can go as high as 37% at a pretty low threshold, around $18,000 or so. One exception, or one workaround I should say, is if you are self-employed, you can set up a solo 401k. And as per section 514C9, there's an exception for 401ks that use leverage to buy real estate. So you can actually do what you wanted to do in your self-directed IRA, use leverage, use a non-recourse loan, secure a flip. If you did it in a solo K, you'd be able to circumvent and get around the UBIT tax. So that's a huge, huge, huge potential win. That's why a lot of real estate investors try to get into a solo K. How do you get into a solo K? Well, number one, you got to have a business. Number two, you have to be self-employed, or the business could have no full-time employees other than the owners, their spouses. Full-time employee means 1,000 hours during the year, or 3 consecutive years of 500 hours. So in sum, yes, you can use leverage to acquire real estate in a self-directed IRA. Has to be a non-recourse loan. You also need to concern yourself about the UBTI tax rules. But if you can get into a solo K, you're self-employed, small business with no full-time employees, you can then do your deal, borrow money, secure a flip, acquire real estate without paying any UBTI tax, and essentially supercharge your real estate return. So hope you guys enjoyed today's video. Thanks for watching. If you have more questions or comments, leave them. I'll do my best to get to them as soon as I can. You can also contact the amazing tax people at IRA Financial who can help you navigate how you can structure a self-directed IRA or solo 401k real estate flipping transaction.